Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. We, of course, have the sale still running, so make sure you guys check that out. Before we get started, I've seen a lot of people recently say the same thing that they've always said for years, and that's essentially, hey, your mic is too quiet. So I went into my audio settings and I adjusted the microphone. So all I want to know from you is, does this sound better or worse? Okay. Let me know if it sounds better or worse. And also let me know if it's loud enough, or if you think it needs to be louder, or if it's too loud, right? It would be worthwhile for me to know the answer to that question. So just let me know what you think with regards to the microphone. I'm just trying to make it a little bit better, but I'm not going to go buy another microphone. I think the internal one is just fine. So anyways, Bitcoin is now at around 62 to 63K. And we did run the highs today, which is something that we said was, was likely going to happen given the momentum, and especially given the fact that all Bitcoin pairs still had that liquidity that they could afford to give over to Bitcoin, right? And so we did run the highs for the first time ever before the halving, right? So Bitcoin has never run the highs before the halving before. So that is a first, and it also makes me think that this cycle will continue to throw us curveballs one after another. Historically, new highs come after the halving, suggesting, right, certainly suggesting that this cycle is throwing us a curveball, right? Again, that's just the nature of it. We've said for a long time that we are definitely more heated right now going into the halving than we ever have been. And it's just kind of notable, right? It's notable to say that, look, like, it's been a solid run up over the last 15, 16 months, and Bitcoin just swept the highs. So a lot of things to talk about, and there certainly seems like there's a lot of confluence amongst a number of the indicators and charts that we've been looking at over the last year and a half. And so in this video, I do want to go through a lot of those things. Now, we do go through a lot of those things in the last two live streams that we did, but it was more like a sort of like a stream of consciousness from me. In this video, I want to go through each one very slowly and just kind of talk about where we are, right? So there's a lot of things that I think are notable to think about. And if we were to go through each one, right? One of which is that Bitcoin dominance to 56% first, and then 60%, right? And the reason why I separate those is because, the move to 56% could be characterized differently than from 56 to 60, assuming that it happens, okay? This is something that we've been talking about for years now, right? Back when dominance was at like 39%. And now that we are finally getting very close, it's one thing that we have to be aware of, that it signifies that the cryptoverse is healing, right? That's what it symbolizes, that it's healing. And that's just a natural part of the cycle. It's not, this time is not different in that regard. I still have never understood why the Bitcoin dominance thesis was so contentious when it's just kind of what it does at, during higher rates in QT. So that is something that it seems like it's happening, but it hasn't happened yet, right? So we can't really check that one off. There's still some work to do. I think we're going to make it there, right? But there's still some work to do with that. If we go check in on our favorite Bitcoin pair metric, total 3 minus USDT divided by Bitcoin, the argument is that we should see a weekly close below 0.4, meaning a weekly close at 0.39 or below. And if and when that happens, it should mark a turning point in the cryptoverse in terms of altcoins should then bleed down against Bitcoin relatively quickly. For a long time, we have seen altcoins flirt with the low, but being unwilling to actually go below the range low, just like we saw last cycle, right? Just like, I mean, it's the same thing. And back then, after putting in that wick low, it took 41 weeks to break down. Now, I don't know how long it's going to take to break down, but I do think that liquidity will make its way back over to Bitcoin. It's been about 36 weeks. So 41 weeks would put us out in April, so just about another month from now. It could, of course, occur sooner, but just something to say, hey, guys, we've been talking about this forever. It seems like we're heading in that direction. And if that materializes, it's important to understand what happened the last time, right? And the last time that happened occurred just before the Fed cut rates, right? Overlay interest rates. I mean, I swear, it feels like a crescendo where everything is converging, right? So you can see that when alt Bitcoin pairs broke down, it corresponded to just before the first rate cut arrived. And if we go and look at sort of market expectations for monetary policy, which again is subject to change, and I don't really put a lot of faith in these probabilities. Right now, the market is suggesting the first rate cut arrives in June. And I could be on board with that idea. I certainly could be on board with that idea. But there's a part of me that thinks like maybe they'll actually do one in May. Again, looking at this, I would tend to defer to what the market is saying. I don't think I have any special insight compared to the collective, group of investors that are sort of looking at this stuff. But if alt Bitcoin pairs were to break down, let's say sometime between now and the beginning of April, we know that last time that happened, the Fed cut the following month. And so the next meeting after the March meeting, let's assume they're not cutting in March. I imagine the labor market data would have to come out pretty awful for them to cut in March. So we'll see what that comes in at. But assuming it's not that awful, then let's suppose that the first real chance of a cut is May. Still only a 21.7% chance. Again, the odds I imagine still favor a June cut, but we'll see if they can if they can make it that long. So going back over to this metric, looking at total 3 minus USDT divided by Bitcoin, we're at 42% now, right? We're at 42% now, and all it takes is a weekly close at 0.39. That's all it takes. And again, I don't know if it's going to play out the same way as last cycle. I really don't. But just remember that last cycle, when that happened, right? When all Bitcoin pairs broke down, all USD pairs also had a larger correction. Okay? Again, could this time be different? Could be. I'm just pointing out what happened last time. You can use that information and make your own decisions. And I think the point is to say, like, it doesn't have to play out a certain way, but you should understand that there is a risk, right? And that risk also materialized back in 2019, just when people, thought it couldn't happen. So I would say just keep an eye on it. Something we've been talking about forever, but it still hasn't actually broken down yet, right? So again, putting this over here, right? Total 3 minus USDT divided by Bitcoin, weekly close below 0.39. Hasn't happened yet, but again, it seems like we're building up. It seems like there's a crescendo where a lot of these things are slowly occurring. And a lot of people don't really want to believe it, but we're kind of heading in that direction, right? And the other thing that's sort of a derivative of all this stuff, of course, is the ETH Bitcoin pair, which I think will eventually get a weekly close below 0.049. Okay, now remember last cycle, ETH Bitcoin had a weekly close below the range low 2 weeks after alt Bitcoin pairs broke down, suggesting that alt Bitcoin pairs would likely break down before ETH Bitcoin because Ethereum is a relatively safer asset compared to altcoins. Some people would say ETH is also an altcoin, and by the strictest definitions it is. But when I refer to altcoins, I'm talking about everything besides Bitcoin and ETH. All right? So in that sense, it seems like we are heading that direction. But in the short term, we know that it could take some time for us to get there. While alt Bitcoin pairs broke down a month before rate cuts, ETH Bitcoin broke down the same month as rate cuts in the last cycle. So it could hold on a bit longer. And we do know there's the whole spot ETF stuff for Ethereum coming up potentially in May. I don't know if it's going to be approved or not, but one thing to continue to sort of keep in mind is that there's this fractal right here, which we've actually been following pretty closely so far, right? If you think about it, right? We had a big move up and then a move back down where it bottomed sort of in early to mid-February, and it came back up and put in a lower high. We saw the same thing here, right? It went up here, it came back down, and it found a low in mid-February. It came back up, put in a lower high. But you can see that from that point, it was a very slow bleed back down. Basically, where ETH Bitcoin only marginally dropped throughout the entire month of March, and then the drop started to pick up in April. And again, if you think about what's happening in April, we have a Bitcoin halving coming up. And so I think that Bitcoin should remain stronger than Ethereum, not only because of the halving narrative, but also because we saw ETH bleed to Bitcoin until we went back to QE last cycle, and we haven't seen that yet. Again, we haven't even seen that occur yet. Looking at the balance sheet by the Fed, ETH Bitcoin bottomed precisely at where the Fed shifted from QT to QE. So we haven't seen a rate cut. We haven't seen the shift from QT to QE. And we also have the Bitcoin halving coming up. Three great reasons why I think ETH Bitcoin will eventually bleed back down to the range lows and eventually give us a weekly close below 0.049. So that's the next thing, is that ETH Bitcoin should get a weekly close below 0.049. So again, all three of these things are all kind of the same thing, right? They're all more or less the same thing, but it's just certain milestones to keep in mind that, hey, these things are sort of, milestones that we've been looking towards. Again, it doesn't have to be what you want to happen, and it might not happen. It's just that based on the historical record, these are milestones that are likely going to happen at some point, and so it's worthwhile to be prepared for that potential outcome, whether you want it to happen or not, right? Whether you want it to happen or not. So all three of those things, I think, are slowly occurring, but none of them have actually happened yet, right? And again, until they actually happen, it's still just a theory. But there's other things that are starting to happen and that already have happened. And one of those is gold breaking out, right? This is something, and actually before we get to gold breaking out, the next thing I want to touch on, because it relates to these, is Bitcoin dominance plus ETH dominance. I have said that this should get a weekly close greater than 73%. So Bitcoin dominance plus ETH dominance to get a weekly close greater than 73%. And the reason is because that would actually correspond to the breakout point. Do you notice over here, we also, Bitcoin dominance plus ETH dominance, we're going to call it blue chip dominance. I consider ETH a blue chip, but the reason I haven't been optimistic on it for so long is because it's just bleeding back to Bitcoin, and Bitcoin's relatively safer. So I'm not going to concern myself if alts are bleeding to ETH, because if ETH is bleeding to Bitcoin, then alts are also bleeding to Bitcoin. So in that sense, you can see that last cycle, despite the fact that stablecoins were more a part of this cycle than last cycle, we also had troubles seeing the Bitcoin plus the blue chip dominance breaking through 73%. And once it broke, Bitcoin cooled off for a little bit, right? We saw Bitcoin kind of cool off for about half a year. It then started to rally, and then we got the pandemic. We got it, everything got rinsed, and then QE came back. So 73%. And we're not that far away, right? I mean, we're at 72.83%. And I, if you look at it, it looks familiar, right? I mean, we are building up to it. Still not a weekly close above, but it's not that far away. And so you have all all four of these things, which are essentially derivatives of each other, and they're all sort of building up to the same thing. Now, it's harder for blue chip dominance to go up because ETH dominance usually goes down when Bitcoin dominance goes up. So in order to get a weekly close above 73%, Bitcoin dominance has to go up more than ETH dominance is going down. And that's why it takes a lot longer. So all four of these things, it seems like we're building up to, but we still haven't seen them yet. Now, the next thing, which again is somewhat loosely related, is USDT dominance going to approximately 4%. Approximately, right? And the reason why I say approximately is because, this is more of a hand-wavy type thing. They're all hand-wavy, to be completely honest. But if you were to go look at the USDT dominance, we've sort of outlined this for a long time, that USDT dominance has this habit of going back to this trend line. And once it gets to that trend line, then it starts to make a U-turn, right? And again, to some degree, trend lines are made to be broken. And I'm not going to say, this is not a hill I'm going to die on, the USDT dominance. Frankly, I don't really care about it. But I'm just pointing out that every time it previously hit this trend line, Bitcoin did have a larger pullback, right? November 2021, March 2021, February 2020, June 2019, November 2018, even though we were, a year into a bear market almost, we still had another big drop after that. And then December 2017. So every time we hit this trend line, something happened, right? Here it was high inflation, right? Over here it was probably China banning Bitcoin. This was the pandemic, right? This, June 2019 was just before rate cuts arrived. November 2018, we had some crypto specific things. I'm not going to get into that right now. December 2017 was, of course, the all-time high at 20K back at the end of that bull market. So every single time there was something, right, that was given as a reason, maybe, just maybe, if it does bounce off of this trend line and USDT dominance goes back up as people maybe go back into some stable coins, I do, or not necessarily as people go back into stablecoins, but just as the market cap of some cryptos might not hold up as well. It could be because of, say, like yield curve on inversion, right? I do think that yield curve on inversion could be kind of the narrative around the next bounce potentially off this trend line. Now, the reason why I say that it's not so clear is because with trend lines, one of the reasons I don't like about trend lines is because you can easily adjust them and tell whatever story you want to tell. I could drop this trend line all the way down here, and it doesn't really look like anything has changed, and it takes it from basically 4% all the way down to 3.75, right? So that's the problem with trend lines like this. I prefer horizontal trend lines. Like what we were looking at with, like, say, the blue chip dumps. I prefer horizontal trend lines. I think they mean a lot more than these sorts of trend lines. But again, this is just something that we've talked about for a while. We did a whole video on this back when USDT dominance had approached 6.5% just a few weeks ago. And I said, guys, look, this could very well drop down to 4% as we get a big rotation into Bitcoin going into the halving. And we're already there. You could argue that we've already tagged the trend line. But again, it's one of those things where you could adjust this trend line fairly easily and say, all right, we haven't tagged it yet, but maybe we'll tag it in a couple of weeks. So that's something that we can say has sort of occurred, right? Hasn't yet occurred, technically. I don't think we technically hit 4%. We went down to, we did. We went down to 3.98. So we have hit it, right? We have hit that 4% threshold. So that is something I think we can say, look, whether that ends up being something material that we're going to look back on and be like, oh, yeah, it was kind of obvious. It's happened, right? And again, it's important to recognize that this thing we've been tracking for a while, it's happened. Now, some people would say, well, why don't you include USDC dominance? We could do that too, but I don't really think you're gonna find much difference in it. It's basically telling the same story, right? This is USDT dominance plus USDC dominance. So it tells a fairly similar story. So that is something that has already occurred. Now, the next thing is gold breaking out, right? Gold breaking out. This is sort of the next thing that we've talked about. And gold is breaking out. And I don't know that it's sort of definitive yet. I think that it would be still somewhat premature. We had a wick a few weeks ago to higher levels, right? I mean, it went all the way up to 2146, which is still higher than we've gone. So until we actually get a weekly close up here, it still could theoretically be a fake out, right? I mean, imagine if gold went back down to less than 2070 by the end of the week, and this is nothing more than a wick, then you start to wonder. The reason I think it might not be a fake out, is that the level that I said previously was a weekly close above 2070, and we got that last week. We had a weekly close at 2082, and now it seems like we're seeing follow through this week. Again, I would like to see another weekly close up here. If we get another weekly close up here, then that would seem like confirmation to me that gold is breaking out. The reason why that's important is because for Bitcoin is because when gold broke out over here, it meant something, right? And again, Bitcoin didn't top out. It didn't find a local top immediately when it broke out. It took about another week. Bitcoin cooled off for a while, and then we had another run. But again, it's something to consider that gold is potentially breaking out at the same time that all these other things are sort of in motion, right? All these things are kind of in motion. And so that is something that is also happening, right? So these two things, we could argue, have already happened, right? The next thing that we've talked about is the fear and greed index going into the 90s. Now, it's back down to 75 now. So it took a pretty big hit. If you go look at the fear and greed index, here it is back at 75. But we've talked a lot about if you overlay, just say, the 90 to 100 range, right? We've hit it, just like we did hit it over here, and just like we hit it in 2019, also during QT and high rates. My contention is that when people say, is it like 2019 or 2020, it's like 2024. It's a combination of the two. It's a combination of quantitative tightening and high rates, but also a combination of all-time highs. So it's not 2019, it's not 2021, it's 2024, where it's kind of something in between, right? It's occurring during tighter monetary policy, where Bitcoin dominance is going up while all Bitcoin pairs are bleeding, but it's also occurred at an all-time high. What's fascinating to me is that this rally at this point was a 345% rally. Why is that interesting? Well, the reason why that's interesting is because this rally in 2019 during QT and high rates was also about 340% or so, right? So a very similar rally. But the difference is that in this case, it actually led to an all-time high, right? Because of diminished volatility to the downside, a 300% rally actually gets you to all-time highs. So we ran the highs before the halving. So again, the fear and greed index has hit 90. So again, I go to these ideas of like, it still seems like we're experiencing a lot of confluence with all these things that we've talked about forever. Gold breaking out, fear and greed index hit 90, USDT dominance hit 4%, blue chip dominance is nearing 73%, ETH Bitcoin still a ways to go to 0.049, alt Bitcoin pairs not that far to go to 0.39, Bitcoin dominance still a little bit of ways away from 56%. So a lot of things, right? So then, of course, everyone wants to know what's going to happen with Bitcoin, right? And again, I can't really say for sure. Obviously, I don't have a crystal ball. But what I would say is that my guess is that whatever happens going into the halving, the dominance of Bitcoin is going up. Meaning that if you do get a rinse in crypto where it goes down a lot more, I would guess the dominance would go higher. If you watched closely earlier, when Bitcoin was only down about 2 to 3%, altcoins were kind of still holding. But the minute Bitcoin went down 5 to 6%, altcoins took a huge hit. So if Bitcoin were to drop, whether it's back down to say like the 20-week SMA or like the 100-day SMA, right? Anything like that, I would expect dominance to go higher. If on the other hand, Bitcoin continues to sort of slowly grind back up, I'm guessing dominance also goes up. And there still is liquidity in altcoins that I think will make their way over to Bitcoin. I mean, they're making their way over to Bitcoin right now, right? I mean, Bitcoin hasn't really been moving today. I mean, look at Bitcoin USD. It's down, but alt Bitcoin pairs are mostly down, right? I mean, ETH Bitcoin is up 0.13% at the time of this video, but look at all these altcoins, right? They're down. The cryptoverse is slowly healing, right? So again, it seems like we're building up to this crescendo where alt Bitcoin pairs are breaking down, just as Bitcoin dominance is hitting these milestones. USDT dominance is hitting its milestone. Gold is breaking out. Blue chip dominance hitting its milestone, et cetera, et cetera, et cetera. Now again, is 69K the level that we just hit? Is that going to be the top for a while? It could be. I really don't know. I really don't know. I'm just trying to be honest. I don't know. I don't have a strong conviction on whether we go above that in the short term or not. I still think there's liquidity in alts that'll make their way back over to Bitcoin. I don't know if it's going to be sufficient in the short term to take it to a new high or not. It's probably going to be somewhat dependent on spot ETF flows. And, one thing I've always been curious about with the whole spot ETF stuff is I imagine that the people that hold those are not your typical diamond hand hodlers, right? Because if they're diamond hand hodlers, they weren't waiting for the spot ETF to buy Bitcoin. That wouldn't make any sense. So I'm curious, after a day like today, what happens? Do the flows keep on coming? Do they take a hit for a little while? Right? I don't know. So I would keep an eye on that. I would keep an eye on the flows there. I would still look at the altcoins because again, the issue for Bitcoin USD that it's going to have to contend with is that it's had basically like 3 really good sources of flows: spot ETF, the regular DCA, and people that just kind of keep giving up on altcoins and converting them back to the king. You might say, well, Ben, even if altcoins go below 0.39, who cares, right? People could still convert their altcoins to Bitcoin. Therefore, there's still those flows coming in. And while that may be true, the problem is that the purchasing power of those altcoins to buy Bitcoin has diminished. So at one point, the ETH Bitcoin ratio was at 8%, right? Now it's at like 5.5%. So again, as these alt Bitcoin pairs bleed, then as people continue to convert them to Bitcoin, they just cannot buy as much Bitcoin because the value of those altcoins have gone down so much. And when alt Bitcoin pairs broke last cycle, they then went down very quickly after that, right? From when they broke, they then dropped another like 40% within just a couple of months or so. So the purchasing power of alt Bitcoin pairs could go down very quickly if the range lows break. And again, that is something that Bitcoin USD will have to contend with. That and again, I don't know the answer, right? I'm just saying, like at some point, the liquidity in the altcoin market will not be as much as it once was to buy Bitcoin. And one of the reasons is because Bitcoin USD has gone up so much, and altcoins just simply cannot compete. I mean, the problem with altcoins is that there's so many of them, and you have everyone trying to convince you why their altcoin is the best. All while Bitcoin dominance just keeps on going higher, So you have to be careful, right? You really have to be careful. And I'm not like anti-altcoins. I do think there's more to the cryptoverse than Bitcoin. I just think that we are in a phase of the cycle where alts bleed back to the king. And it has nothing to do with the fundamentals of any of the different cryptocurrency projects. I've heard for years now why ETH should outperform Bitcoin. Because if we're in a bull run, ETH outperforms Bitcoin. Again, I think what people are failing to recognize, and I've said this many, many times, is that ETH outperforms Bitcoin in a QE bull run, right? In a QE bull run, right? This was a QE bull run over here, and ETH Bitcoin went up. This was a QT bull run. This was a QT bull run right here in 2019 where, the Fed was draining assets off the balance sheet. Bitcoin USD went up, but ETH Bitcoin was going down. When the balance sheet was going up and Bitcoin was going up, ETH Bitcoin was also going up. So a lot of people keep saying, well, like ETH outperforms Bitcoin in a bull run. I'm like, yeah, in a QE bull run, but in a QT bull run, Bitcoin remains supreme in terms of your risk-adjusted returns. And the problem with ETH during QT and high rates is that it is riskier than Bitcoin. Bitcoin is fundamentally safer. It's more sound. It's been around for longer. It's the higher market cap coin. And so you're taking on more risk with altcoins, and in a lot of cases, you're getting a lower return. There are some altcoins that stand outside of that sort of generalization, and some of these altcoins are actually doing quite okay. But I always said there would be some, but the general trend for alt Bitcoin pairs is down. So it is true that in a QE bull run, ETH Bitcoin can go up, but in a QT bull run, ETH Bitcoin goes down, right? And so while ETH Bitcoin is fading, you kind of have people saying, well, it's holding up well the entire way that it just keeps on bleeding, right? And that's kind of the issue, is that everyone's sort of living in 2020 and 2021 QE bull market, when they really should be looking at what happened over here when the Fed was much more strict. And that's why the dominance is going up, right? It's because of higher risk assets continue to bleed to lower risk assets. And there's a lot of altcoins that are bleeding to ETH right now. In fact, the ETH dominance has held up pretty well, in fact, given the circumstances. But it is still slowly fading, right? It is still slowly fading. It actually has been moving up a little bit here since December. But, I mean, you could see that it's been putting in lower highs really since November of 2021. So, again, that's something that is worthwhile to consider. So we have all these things, right? We have all these things happening. And the other thing is, if you look at even like, say, net liquidity, and you look at what happened a year ago, right? Bitcoin USD found a local top kind of in the surge of net liquidity that finalized in early April. And you can see that net liquidity kind of turned the corner here in late February, early March, which it sort of looks like it's doing this time as well. So imagine if in a few weeks we have alt Bitcoin pairs breaking down, ETH Bitcoin breaking down, Bitcoin dominance at 56%. The Fear and Greed Index, it's already hit the milestone. Maybe it hits it again. Gold still holding on, and USDT dominance has already hit its milestone, right? You can just kind of see how the confluence is all there, right? So what's the thing, right? What will cause alt Bitcoin pairs to actually throw in the towel, right? What will cause it? Well, if you look closely at last cycle, and if you look at monetary policy, and you look at the yield curve, you look at treasury yield spreads, one of the things you may note is that while it wasn't talked about nearly as much as it has been this cycle, we did have an inverted yield curve. In fact, 10-year and the 3-month yields, treasuries, were inverted. And you can see that basically, I mean, it inverted in May of 2019, and then it uninverted in October. So alt Bitcoin pairs broke support. What was that? In June, so July, August, September, October. So 4 months. Right? 4 months before the yield curve uninverted. I don't know when the yield curve is going to uninvert. 4 months? April, May, June, July? I don't know. Maybe the labor market holds up till then, right? And if it does, then you might not get an uninverted yield curve right away, right? You could see alt Bitcoin pairs break down before the yield curve uninverts. And then when the yield curve actually uninverts, kind of like it did over here in late September, early October, guess what that corresponded to when the yield curve uninverted? You know what it corresponded to. It corresponded to the Fed going back to the market's favorite drug, QE, right? QE. QE returned in September of 2019. And in September of 2019, alt Bitcoin pairs bottomed right there. Literally to the T. Alt Bitcoin pairs bottomed when we went from QT to QE. And when we went from QT to QE, it was upon yield curve uninversion. So we're just sort of thinking ahead here. What if we get yield curve inversion in a few months? Would that make sense? Absolutely. Did you know that the median time, the median amount of months that it has taken for the Fed to start cutting is 8? And March, we're actually in the 8th month after the pause. This is month number 8. If you don't believe me, which you should not, right? Never believe blind statements. Like, ask me to prove it, or if I don't, say, hey, you need to actually show it. If you look at interest rates, right? If we just pull US interest rates up, you can see pretty clearly here. Let me get rid of all this stuff. You can see pretty clearly here, right, that we paused in July, and we're now, what? It's more than 6 months, right? Because July is, so August, September, October, November, December, January, February, March, right? So it's 8 months. I'm not really sure why it's showing. Oh, because it's including, that's sort of the distance, right? It's kind of like skipping one, I guess, and I guess it'll update. Right now, it's just showing it. That's the problem. It's just showing it through January here because that was the last meeting. But if you extend this out till March, which is where we are right now, it's at 8, right? At 8 months. And 8 months is the median number of months after a pause, I believe, until the Fed pivots, if you go back and look at all the prior data. Right? I mean, there's different lengths of time. This one over here was like 6 months. This one there was 14. Here it was 7. There's all sorts of different ones, right? 4. But again, like on average, right, it's about 8 months or so. Again, most cycles are not average, right? It's if you average everything out, that's what of course you get the average. But I mean, every cycle is different, and some are going to be shorter than the average, some are going to be longer than the average. And unless we get a cut this month, it's going to be longer than average. So if we don't get a cut in March and we don't get a cut in May, then maybe we get a cut, I don't know, in June or July. So probably you're going to get at least a cut between May and July is my guess. I don't know if it'll be in May. I don't know if it'll be in June or July, but I'm guessing you're going to get a cut somewhere around there. And that, I think, could be sort of the next narrative that we're looking at. And when the Fed starts to cut, that could lead to a shift from QT to QE, which could lead to Bitcoin dominance topping and alt Bitcoin pairs bottoming. So it seems like all these things we've been talking about are slowly happening, even though it feels like every step of the way it wasn't, right? But it looks like we're trending in all these different directions at the same time. And so that's why I say I feel like we're building up to a crescendo where kind of everything's happening. And you could even argue that I mean, maybe the crescendo was today, where it hit the all-time highs. Again, there's plenty of counterpoints, right? The points to say the crescendo is behind us is the fact that gold is breaking out, USDT dominance went to 4%, and the Fear and Greed Index is already hit 90. The counterpoints to all that, though, are that alt Bitcoin pairs and ETH Bitcoin still haven't broken down yet, suggesting there's still some liquidity. Is there enough liquidity to send it to a new high? I don't know the answer to that question. I don't. I would defer to someone else that is better at predicting Bitcoin USD than I am. But I would say that these are sort of the process. The process of all this stuff is playing out. It's just taking a very long time for it to do so. I'm trying to think, are there any other things to touch on? Those are the main things that I believe that I wanted to mention. Just going over to the website here. Bitcoin risk 689. We did go to the 0.7 to 0.8 risk band, right? We did hit that level. So these are the 0.7 to 0.8 is highlighted on the chart. We did hit that level. Note that in 2019 we only went up to 0.6 to 0.7. So that did occur. If you look at stuff like the stablecoin supply ratio oscillator, it kind of seems like it's doing what it always does. putting in some highs, and after the highs are in, it slowly bleeds down while Bitcoin continues to climb the wall of worry, right? It's been doing the same thing as always, so that hasn't really changed. My guess, and again, I could easily be wrong, but my guess is that we're sort of like leading into, like, we've already seen the high for a little while, or we get, we get another run up and we go higher. But I'm guessing that whenever that's all said and done, whether it's now, whether it's in April or May, we're then going to cool off for a while. And then the next discussion will ultimately be, was that it? Or do we get another one, right? Do we get something else? Maybe later in the halving year, maybe in the post-halving year. The last 3 cycles, we saw Bitcoin peak out in Q4 of the halving year, or sorry, in the post-halving year. Those cycles also didn't see Bitcoin at new all-time highs this soon, but it is something to think about. And another really interesting way to look at the market is to look at sort of the ROI from the peak and from the lows. And if you take it from the peak, ROI after latest cycle peak, well, that's looking at all of them. Here it is. So if you look at it like this and go peak to peak, we're really far ahead of where we normally are. So even if there were larger pullback after the halving or something, it's not like, I mean, again, at this point in the last 2 cycles, Bitcoin was still down 66% from the highs. I mean, again, like, think about that. In the last 2 cycles, as measured peak to peak, Bitcoin was still down 66% from the high. In this way, it looks like we are really far extended. Very extended. But do you know how everyone talked about April being the top and not November? I was one of them, right? Saying April was a more technical top in a lot of ways. What's interesting is if you look at this chart as measured from April instead of November, we're kind of where we usually are, right? Doesn't really look that weird when you look at it like that, does it? You can also look at it as measured from the lows, right? And in that case, if you measure it from the lows and you just look at the last couple of cycles, we're also extended, right? So that's why I keep going to this idea of like, yeah, like, I don't know how long it's going to last for, if it's over already or we get another run up. But my guess is that at some point, post-halving or something, could happen before, but I mean, we've been very narrative driven so far. I don't know why that would change. But at some point, I imagine there's a larger drawdown. And then that's kind of the next discussion in the cryptoverse is, do we get another run? And again, I mean, what's fascinating about it is even if we had a larger drop, we could still be where we were at in prior cycles at the same time. The problem for altcoins is that if Bitcoin does get a larger drop sometime in the next few months, the issue is that a lot of these alts are never even close to their all-time highs. Think about that, right? Think about that. They're nowhere even close. And if Bitcoin drops and altcoins are still 70% below their lows, that's why it's so difficult to be in altcoins over Bitcoin, because dominance just keeps on going up. But the trick, though, is that if altcoins do bleed against Bitcoin and the Bitcoin dominance goes to 60% and something happens in the labor market leading to the yield curve inversion and there's a larger sell-off in risk assets and then the Fed pivots and goes back to QE, everyone by that point has been converted into a Bitcoin maxi, and not everyone, but a lot of people have been converted into Bitcoin maxis because they just spent 3 years watching most of these alts bleed to Bitcoin, right? But then by that time, QE comes back, and then finally ETH starts to durably outperform Bitcoin. And the cycle goes on, and the cycle goes on, and the cycle goes on. So again, I don't make the rules, I just try to enforce them, right? And that's the kind of the way the cryptoverse works, is you have different types of monetary policy, that lead to different types of behavior in the cryptoverse. And that's kind of where we are, right? So I do think that there's probably going to be a larger pullback at some point. It could be post-halving for all I know. And it could be a pullback from a higher price too, right? But if and when that occurs, look at altcoins during that time. And then, you could still see Bitcoin well off its prior low, but altcoins could be struggling a bit, especially on their Bitcoin pairs, right? On their Bitcoin pairs, they're still putting in new lows. I mean, they are. And the altcoin reckoning was always, as I stated in almost every single altcoin reckoning video, the altcoin reckoning was the devaluation of altcoins on their Bitcoin pairs. And here we sit in March of the halving year, and we're not even that far away from seeing altcoins put in new lows on their Bitcoin pairs. Some altcoins are already doing it, right? Matic Bitcoin is already putting in new lows. AVAX Bitcoin, it's bleeding back down. I'm guessing it's going to come back to this line eventually, at the very least, right? Poor Litecoin, all it knows how to do is put in new lows against Bitcoin. XRP Bitcoin just keeps on putting in new lows, right? I mean, this was a low from 2020, but if you look at the lows from say like 2022 and 2023, it just keeps on putting in new lows. So for every person that has gone after Bitcoin dominance in favor of XRP, look at the chart. Dot Bitcoin, not that far away from a new low. Aave Bitcoin, putting in new lows this week. BNB Bitcoin could easily go down and put in new lows. Link Bitcoin. Is it just another double top right here? I don't know. Even Sol Bitcoin, it has been stronger than a lot of the other ones, no doubt about it, but it is still slowly fading, right? And if it can't hold here at its bull market support band, then you're likely looking at it going back down to 12,000 sats from 19,000. Maker Bitcoin has been heading back down, right? ADA Bitcoin, it's not even that far off the lows, right? It's back below 1,100 sats. The lows are like 800 sats, which is another 20% drop, but it's putting in new lows basically. So when you think about like the altcoin reckoning and thinking about the devaluation of altcoins on their Bitcoin pairs, what if they just keep on putting in new lows? Then was the altcoin reckoning ever even over? Even though people think it was, if they keep on getting devalued against Bitcoin? Probably not. So again, I go back to this idea of like, it seems like we are kind of building up to this crescendo where all of these things are slowly playing out. Some of them have already played out, like the Fear and Greed Index at 90 or above, gold breaking out. Still need to confirm that, so we'll wait. USDT dominance around 4%. We still need to see this happen. So this one hasn't happened. This one hasn't happened. This one hasn't happened. And this one hasn't happened. But what if they all happen? If they all happen, then I'd like to think that the thesis was true and that a lot of people just didn't have the patience to wait it out. But remember, the business cycle takes years to play out. Years. So it's easy to get lost. It's easy to get lost in the day-to-day stuff. But anyways, those are my views on the market. Again, if you guys like the content, make sure you subscribe, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We have tons of charts on the website, right? Absolutely tons of charts. Not only, these are stock charts, right? We have stock charts, crypto charts, macro charts, charts within charts, right? If you go to, any of these and you click on one, right, you can always just then go pull it down for another cryptocurrency as well. Maybe you don't care about Bitcoin because you don't like preserving the Satoshi valuation of your portfolio. You can go click on other altcoins. A lot of different things to look at there. So links in the description below. Make sure you guys check it out. Thank you guys for tuning in. Subscribe, give the video a thumbs up, and let me know, how does the audio sound? I'll see you guys in the comments.